I am Mike Severns, and this is the Hungry Realtor Podcast. Welcome back to another episode of the Hungry Realtor Podcast with me, Mike Severns, the Hungry Realtor. Joining me today is Nick. How are you doing?
Doing good, man. I appreciate you having me on. Excited to be here. I have a nice little conversation.
Oh, I appreciate you coming. Tell the audience a little bit about yourself and who you work for over at MB Capital.
Yeah, so I'm Nick DeFederico. I'm the lead funding strategist here at MB Capital Solutions. I've been here almost 8 years now, which is crazy to say. It's been a nice long ride. But what we do is we specialize in unsecured funding. So essentially, we leverage personal credit to get funds inside your business entity name that you can go out there and use for whatever you want. So regardless of what type of business you're in, we can definitely help you get access to working capital. But most of our clients are real estate investors all across the country, right? Like maybe they're doing fix and flips, buy and holds, wholesaling, and they just need extra cash, right? Who doesn't need extra cash when you're out there investing? So we're helping our clients get working capital so that at a very minimum, they have like down payment and closing cost money to go out there and get into whether it's their first fix and flip or their next fix and flip.
Nice. Nick, for those that might not be familiar, can you explain exactly what an unsecured line of credit is and how it differs from other types of financing?
Yeah, absolutely. So when we're talking about unsecured, it just means that we're not collateralizing it with anything, right? Think of almost like a HELOC, right? It's essentially the same thing as a HELOC, except we don't have to collateralize the house.
Okay.
We're not putting liens on properties or assets. Essentially, we're just leveraging strength of personal credit. You're personally guaranteeing it, but really the beautiful thing about it is it stays in the business name. You can go out there, leverage it, use it. It doesn't report on our personal credit report.
Great. And with those unsecured lines, are there usually lower limits on that kind of thing? A credit card would only go up to $2,000 or $5,000. How does that work with a business line of unsecured?
Yeah, different ballgame, right? Most lenders, even though it's unsecured, they're going up to $100,000 or $150,000 per line of credit. So you can go out there as long as we have good personal credit and build up a nice kind of foundation of working capital.
Wow. So what would you say are the primary benefits for a real estate investor to use a line of credit like this, especially if it can go up to those limits?
The number one thing, we meet a lot of real estate investors, a lot of people that want to get into real estate investing. And what we found is like the number one barrier to entry is access to cash. So with these lines of credit, you can use it the same as cash. Ideally, we want you to use the line of credit before cash. I'm a big believer in holding on to our cash. So if we can assemble lines of credit, start to build what I like to call like your funding toolbox, leverage these tools before we get to cash, it just typically will put you in a better situation.
Now, when you're leveraging these lines of credit, obviously there's going to be fees and interest and things like that. What has the recent interest rate landscape done to your business, and how has it affected the lines of credit?
If anything, it's made us busier.
Wow, really?
Yeah, because especially in this high interest rate environment, the lines of credit are still competitive.
Okay.
Prime plus somewhere between 1% to 4%. So on a revolving line of credit that you're not collateralizing anything with, you're paying anywhere from 9 to 12% interest only payments. So if anything, we've seen more of a demand for it because lending is definitely tightened up a little bit. So the more access that we can get, everybody needs money, especially if you're combining it with a hard money lender or a traditional mortgage. More and more, we're seeing people are trying to get a little bit more creative to hold on to cash and go out there and leverage.
It's funny you say that because it does make sense that hard money is probably 12 or 13% right now, plus points, which is crazy. A couple of years ago, you could get hard money at 8%. Now, regular mortgages, if your credit is mid to low, you're paying 8.25%. So if you have good credit, you're paying 6.5%, 7%. This is not the 2.5% and 3% market we had just 2 years ago.
That was fun. We all loved it. Now, I think a lot of people got used to something that really wasn't the normal, right? Even when I started back, this was the normal. This was actually the normal. So I think a lot of people got used to those low interest rates, are now starting to come to their senses that, we're back to the new norm.
I started real estate in 2014 and interest rates were in the mid fives, high sixes, mid fives, low sixes. this is the landscape that I grew up in, so to speak. And I've been telling buyers, the buyers under 30 that really didn't pay attention to the market 10 years ago, this is what it's supposed to be. The things that we've had over the last 5 years, they were great. And we
Yeah.
all loved it because everybody did business. Everybody could buy a house. Investors loved it because most properties cash flowed immediately because the money was
Yep.
so cheap. But now, as long as we stay around, I would say not more than 7.5, 8, we can still have a decent real estate market.
Yeah, absolutely. But yeah, it's funny. I talk to the clients all the time, and especially those who started investing the past couple of years. I had a client the other day where we got them $100,000 in line of credit at prime +1. 2 years ago, prime was 3.25. So yeah, 4.25 compared to 9.25, it definitely feels different. We were actually taking advantage the past couple of years. We were actually having those low interest rates. Just, it wasn't the normal.
Talk to me about some other success stories that real estate investors who have leveraged your business and these unsecured credit lines. Do you have a specific story about someone who really took it to the next level?
Oh yeah. So one that's very recent. So a client of mine, her and her husband, just getting started into real estate investing. I'm going to say this is back in October. They really started
Okay.
looking for their first property. Fast forward to December, we got them into funding. We got, between her and her husband and 2 different businesses that they have, we got them close to $300,000 worth of working capital,
Wow.
which is a crazy number. And we did get strategic for her because we did some like 0% credit cards and some more of the traditional lines of credit.
Mm-hmm.
She just wanted access. And I give her all the credit because since then, this week, she just put her 4th property under contract.
Wow. 4 in just 3 months.
3 months. So she's finding opportunities. She's up in New Hampshire, but she's investing in Philly and Ohio. And she's gotten tied into a nice little network of other investors to where they pass deals around.
That's
But she's leveraging hard money, right? Hard money on the deals, but she's using the money that we got for her as the down payment money, the closing cost money. So she's actually doing all this with none of her own cash.
Oh, wow. So she's 100% leveraged.
100% leverage. She's
Wow.
using the line of credit for the down payment money to kick off the rehab. Hard money lender wants them to start the project. So use the line of credit to get to that first draw. And she's actually at the point now where she's going to leave her full-time job. Like, husband's going to stay in his full-time job, but the focus is going to be full-time real estate because they can see it now that they're actually out there doing it, that it's going to be very beneficial for them.
And that's the dream. I think that's the dream for most real estate investors that still have that primary job. I won't call it the real job because working in real estate is probably more than, your 40-hour a week gig that most people have. But I hear this story all the time. I meet new investors all the time. And that's what they want. They want freedom. They want to, cut the ties. It's awesome that you are able to help facilitate that.
That's the best part of my job. Like, hearing those stories, like when I have status check calls and we're checking in kind of a couple months after we get funding, and I'm hearing that, it makes me like want to go talk to more people.
Nice.
Right. That's our job, to help people. But you find that there's some people out there that don't like to take action. So you get the money and maybe they're not trying to find deals or they're just loafing around. But then you talk to the ones that are actually taking your kind of advice and the tools that you're giving them, and you're seeing them succeed, and it drives you to go talk to more people.
I definitely get that because whenever I meet somebody and they listen and they sell the house quick, or I advise them on how to place an offer on a home and they win it, I feel the same way. I want to, it's almost like a high, like that appreciation you get from that person because you were the reason that they either sold their home or got their home under contract. And so you just want to go out. I start following up more with people, and I start prospecting faster and harder, just so I can get out there and help more people. I definitely get that feeling.
Yeah, good feeling.
Yeah.
A testimonial from a seller in Pottstown, Pennsylvania.
Michael was an absolute pleasure to work with. He came to my house to do an evaluation of the property and to provide me with an estimate range of what he thought the townhouse could sell for. From then on, the process went very smooth and very fast. He and his team made the entire experience of selling my house a much easier and simple process than I could have ever anticipated. Michael always made himself available in a very short time to answer any questions or issues that came up. The house sold within a week, and I couldn't be happier about how everything worked out. Kudos to Michael and his team.
Reach out at 6105-459961 for help in Pennsylvania, Delaware, or New Jersey.
On the other side of that coin, have you ever seen somebody who got $150,000 and just went the other way with it? Talk about some of the risks and considerations for investors and how they should be beware of this newfound money.
Great question. So I haven't had too many clients that really got themselves into trouble. Too much, I should say, because I always give the disclaimer, right? Like the funds that we're getting for you, it's working capital. We're not going shopping with this money. So we're putting it into a deal, right? Especially for our real estate investors. Right? Know your exit strategy, know what you're looking to do with the money, and to make sure you run your comps, know your numbers. Because when you have the exit strategy, whether it's a flip or if you're burring and doing like a refinance, funds should come back to pay these lines of credit back down. So don't go out there shopping. Don't try to move over your old bad debt onto this money. Go make some profit with this money and pay off the old bad debt. That's the number one thing I always say. Use this into a deal where you're going to go make a bunch of money. Don't look at this as income. This isn't income. This is a leverageable tool to go making.
No, that's great advice. I was hoping that's what you were going to say.
I nailed it then.
Nice. In your experience, like who is your perfect customer? Like what characteristics make an investor or a project the ideal candidate for this type of financing of unsecured credit?
One, obviously we want a small business owner, entrepreneur type of client, real estate investor, somebody who is out there looking for opportunities and just the last thing they need is cash. And then in terms of a person, I don't care about your credit. If we need to do work, if we need to get you in the right position, I'm happy to do that. But really, we like to work with coachable people. We're going to give you guidance. Credit's a funny thing. Everybody thinks their credit's perfect. And sometimes we need to tweak it or do a little bit something like that. So as long as you're open to receiving coaching, we're going to do our best work. That's typically who we look for. Just good people who want to be coached.
Now, when you say coaching, be specific about how much you work with somebody, because I don't want people to think that you're going to hold their hand throughout the entire deal, help pick contractor. What types of things are you doing for customers after you get these unsecured lines?
Great question. So we're not going to vet your deals. We're not going to go out there and put in offers with you. We're going to show you how to use the money, right? Hey, maybe we're using strategic credit cards. How do we liquidate a credit card into cash? How do we use it to go purchase a piece of real estate? Hey, these are our lines of credit. This is the way that we're going to use it. But a lot of the coaching that we do is typically done before we get the funding, especially if we have that client who may need to pay down balances or do some strategic maneuvering credit-wise. We're going to give you that game plan. Some people want to go at them at their own and be like, yeah, I'll just come back to you when I think I'm ready. And what we see is far too much that they don't know exactly the steps they need to take. So we're giving you the blueprint, right? We're going to give you the full roadmap. We just need you to follow it a little bit.
Nice. I'm glad you do that for people, because I run into a lot of people with not bad credit, but their credit could be better. And then they're trying to buy a house, and then a lot of people do, we call it rent to own, which is, I hate to say it, but it really is a scam by landlords to get out of paying maintenance on a home. If I'm really being honest. So if you're listening and you haven't read my blog article on the Hungry Realtor Podcast.com about rent to own, go there and do that. Because most people in the situation, if they can't buy a house, they rent this home to buy it. Deposits are larger, the rents are higher, but in a year, their credit is still just as bad. So they can't exercise the option to buy because they still can't get a mortgage. I'm glad that you work with people to get them through that, you said strategically maneuver things to where they can get their rates.
I got a prime example of that.
Oh, really?
Exactly what you just said. Business owner, was a plumbing business. He came to me from a mortgage broker. So he just needs working capital for his business. He's really trying to do a refinance. And his problem was DTI, right? Debt to income ratio, because he was leveraging a lot of personal credit cards in his business. It was driving up his monthly payments.
Oh, all right.
So we were able to actually get him a line of credit in the business name, take that credit card debt that was business debt anyway, move it off of his personal credit and a lower interest rate into the business name.
No.
But it actually freed up about $1,000 a month in payments on his credit.
You could probably get the refinance through the traditional mortgage.
Yep. Game changer, changed everything for him. He was able to do the refinance, pull some cash out, and now he still has money in the business name to go leverage.
That's awesome. So listen, I know you said we're talking heavily about real estate here because this is a real estate podcast, but I just want to reiterate what Nick said at the beginning, that if you have a small business, I did before I was in real estate, I owned delis. And I wish I would have known Nick back then, because there was plenty of times when a soda case, a meat case, something broke down, a compressor went in the summer, and renovations I wanted to make at my delis, new equipment I wanted to buy. And I was always going to, let's say, less than savory individuals to borrow money because, when I started in the deli business, I was only 20 years old. I didn't really have a lot of established credit. So I had to get creative as well. I like that statement there, create. I found creative financing on the street.
Yeah.
But
hey, listen, whatever we got to do, right?
Yeah, exactly. The door stayed open and the food kept going out the door. But now, so if you have a small business out there, this last example with the plumbing business, or you have a food business, or you have something where you need working, reach out, check the hungryrealtor.com, hungryrealtorpodcast.com for updates on where to go to get these unsecured lines. And speaking of my own experiences, I worked with Eric at MB Capital, and last year I got some secured lines of credit. I think it was $130,000 altogether. I've used it a few times and still looking for that perfect property where I can really 2x or 3x the investment. This isn't just a commercial for MB Capital. The reason I brought Nick on is because I know they're for real. I know they do good business.
Yeah. And it's funny that you worked with Eric, because I worked with Eric.
Oh, that's great.
That's how I met MB Capital, and 14 years ago, I was in the jewelry business.
Okay.
So 2010 is when I was introduced to Eric, because at that time I was buying a lot of gold, right? So cash for gold, cash for silver, I was buying diamonds. If you sold jersey anywhere from Northeast Philly down to Cape May, it probably touched me at some point in the early 2010s. Yeah, I had 13 stores. Much like we flip real estate, I was flipping jewelry, which was nice, except I just needed more and more cash.
Yeah.
So Eric implemented a line of credit for me. He got me $100,000. Completely changed my business. I was able to pull a little cash out at night because even though I was making money, it didn't feel like it because it was all going right back into the business. So fast forward to 2015. At that point, I was investing in real estate and said, yeah, much like you helped me, I want to be able to help others. And the rest was kind of history. So that's how we joined together.
That's awesome.
Oddly enough.
Yeah, it's a great story. I love when customers become partners or start working with me. I have actually recruited people to real estate to be real estate agents that I've worked with because I make it look so easy. No,
I make it look good.
They're in for a rude awakening when they first get there, but I help them, I coach them, and a couple people have had a lot of success after buying or selling a home with. I wanted to get back to talking about the types of businesses, because if you do a quick Google search on like business credit, you see a lot of rules and things like, and one of the things that I thought was a rule, but it was actually a misconception, is that you had to have a company for at least 2 years before you could get these unsecured credit lines. And I found out from Eric that you didn't have to. So what are some other rules or misconceptions that people have when you first meet them that you have to educate them on?
Yeah. So one, everybody thinks, exactly what you just said, that you need to have an established business, that, hey, I need to have 2 years tax returns. I need to have all this revenue in the business. And the truth is that it's not factual. Especially for business lines of credit and business credit cards, when we're going unsecured, the biggest driver is personal credit. As long as we can maintain good personal credit and show a good track record, a lender looks at our personal credit and says, okay, he's been responsible enough to manage debt. We can give him money in his business name, even with a newer LLC. Especially for our real estate investors, I can't tell you how many will just pop open a new LLC for us to go get home 50, 75 grand real quick. We don't have to have that established business that's showing revenue, having full docs. And more times than not, as long as we've kept our personal credit clean and looking good, we can find you some money in the business name.
That's great. Because I always advise real estate investors, especially if they're doing buy and holds, to do a specific LLC every single property just to use that corporate veil to protect themselves from liability. Because if you have 15 properties and they're all in one LLC, somebody has a party and one of their guests get drunk and fall down the steps. Guess what? All 15 properties are at risk. Now if you have a holding company that holds 15 LLCs, now that one property is the only asset.
Yeah. And then from me and from what we do, we can leverage all those LLCs to build up capital.
Yeah.
I'd like to use myself as an example. Between me and my wife and multiple LLCs, we've built up a little over $700,000 of business lines of credit and business credit cards that we have at our disposal. So we do buy and hold rentals, same thing. So we've gotten to the point where, especially the Philadelphia market, I'm self-funding everything. Acquisition, rehab, we're leveraging the lines of credit, 0% credit cards, do the refinance, pay it back, and then go find the next property.
Thinking about lowering your energy bills and boosting your property's value? Transition to solar power today. As a listener of the Hungry Realtor Podcast, you can unlock exclusive pricing just for you. Imagine the savings with solar. You not only cut down on electricity costs, but also enhance your property's appeal to potential buyers. Solar panels are a sustainable, smart investment that pays off in more ways than one. Don't miss out on this limited time offer. Visit our website now to learn more and claim your special pricing. Go solar and see the radiant benefits shine on your investment. Act fast. Go to www.hungryrealtorpodcast.com/solar.
That is a great system right there. So what you're talking about right there, I talk about it with another one of my guests in the previous podcast, the BRRRR method. Right? You're renovating, you're renting, and you're refining. BRRR.
Yep.
Yeah, so
BRRRR, baby, become very popular.
And then it's even, some people even go further and then turn it into a flip opportunity once they put tenants in, because they don't want to be landlord.
Yeah.
They put an F at the end of it, and instead of the refi, they just flip it and then make the tenant someone else's responsibility.
Yeah, if you don't want to deal with tenants, you shouldn't be building a rental portfolio. Unless you're going to get a property manager, which I suggest, even if you have one, trust me, it's not worth the headache of getting that phone call in the middle of the night. But yeah, some people, they don't want the tenants, they don't want the hassle. Making a nice profit on a flip is okay too.
So tell me about your portfolio a little bit, if you don't mind. If you don't want to get into specifics, I understand. I'm interested to know, like, how many properties, what areas are you in? What are some of your stories as being a real estate investor?
Yeah, so up to 12 doors. Everything's in Northeast Philadelphia.
Nice.
So I grew up in Northeast Philly and I just stumbled into investing. So my dad and his cousins inherited a property. Nobody wanted it. I bought it from them.
Great.
And then what happened is it just snowballed from there, right? So the neighbor's property went up and I bought that one. And it got to a point where I had 4 on the same street. And then it just grew from there. It just happened organically. It's not my full-time focus. The full-time focus is MB Capital and growing this lending company, but we slow grow it. We'll do one deal at a time. We'll, refinance it, pay everything back, go find the next deal. Things have definitely been a little bit harder lately because I try to do a true BRRRR, right? Like when I do my refinance, ideally I want to try and pull every single dollar back out. It's definitely harder to do at the moment. Not that they're not out there, but ideally I don't want to leave anything in the deal still. I want to get it all back out and then just move on to the next one. But yeah, it just happened naturally. Looking for the next one now. So if you got anything, send it my way.
All right, cool.
Happy to look at it.
I actually
I
Northeast
focus
Philly too,
on
so
Northeast
I'm very familiar
Philly.
with the area.
Yeah, I grew up in Northeast Philly, George Washington High School. I know the area, good price points. I'm not spending $400,000 or $500,000 per property. For me, especially wanting to leverage everything and kind of self-fund it, Northeast Philly is a nice market.
Awesome. I'll keep that in mind. If I see anything hot, I'll make sure to go across your desk.
Yeah, for sure. Appreciate that.
Do you have
Not
anything
bad.
that you want to tell the listeners about that's happening in the investment world at all?
No, the only thing I've been preaching, right, and I always preach the concept of the funding toolbox, right? Whether it's credit cards, lines of credit, HELOCs, if you're thinking of investing or if you're an entrepreneur looking to do, take advantage of some type of opportunity, start to accumulate this stuff, right? Even if you don't need it right now, start to acquire the lines of credit, start to have it in your back pocket because you don't know when things are changing. Lending's definitely changed a little bit. It's a little bit tighter. So if you're sitting in a position where we have good credit, now's the time to leverage it and start to build up the access. Because I do think that there's a lot of opportunity coming in the real estate market. Whether it's later this year or next year, I do think things will start to turn to where some things may hopefully start to pop up to where, deals look a little bit more attractive. You want to have the access so that you're at the front of the line when that does happen.
Yeah, I think you're hitting the nail right on the head when it comes to opportunity. I'm already seeing that the investor space on some of the estate sales, really run down properties or distressed properties, there's not as much competition there as there was 2 years ago because money was so cheap.
Yep.
Everybody had hard money or they were leveraging retirement funds. But a lot of people were in the space that were new or were part-timers, and it was making it hard for people that you almost had to overpay to even get a property to keep the crews working at points, just so you didn't lose your
100%.
contractors.
I had clients that would tell me that, like, hey, I'm not making much on this deal, but I got to keep this crew working for the next deal.
Right.
So even if I make a couple bucks, I need my crew to stay busy and paid and fed so that they want to keep working for me.
Yeah. And it's good
So
that,
yeah, I totally
when you have an investor that realizes that these contractors aren't a dime a dozen and that the guys that do good work are valuable and they're willing to break even or not make as much of a spread to make sure that their guys eat. That's a good guy. That's a good person.
100%. There's a lot of them out there. I've had a bunch over the past year or two where I'm not making a ton here, but I got to keep the guys working. And they end up paying them back because they do good work. They work faster. They always want to come to your job site. If they know that you're going to pay them and the money's good, they're going to show up for you, which is the hardest part of real estate investing, is those contractors.
I even have a friend of mine started a side business to keep even the lower skilled guys working. He does junk removal. And realtors are always going after him because they know that he's an investor. So now whenever they call, he's, we use it for your junk removal. He turns the call right back around on them. And then, so now he has it was just a side business that, like I said, to keep the lower skilled guys on the payroll in between jobs. It turned out, he's doing very well with it. He just bought another truck right now and he's got, 2 crews going, and it's
not going to be a side business much longer.
Yeah, exactly.
It'll be a full-time business.
Is this a state specific thing, like mortgages? If you have a loan officer, they're only licensed in one state, or wherever their license is, that's where they can only fund deals.
We are nationwide.
Okay,
yeah,
awesome.
Doesn't matter where you're located. You name a state, we're helping somebody there. Yeah, we can definitely help. Doesn't matter where you're looking.
Awesome. So you heard
as long as you're in the United States, Canada, Mexico, but we
Okay.
can't go out of the United States. But as long as we're in the United States, we can get you money.
Wherever you're listening from in the U.S., make sure if you need unsecured lines of credit and working capital, you're going to contact Nick. And Nick, what's that information?
Yeah, so you can reach out. So you can go to WMBcapitalsolutions.com. Definitely check out the website. We actually have a tally going of how much funding we've acquired. Over $140 million worth of permanent lines of credit we've implemented, which is a crazy number. But you can reach out to me directly, 856-438-0399. Touch base. I'm happy to have a conversation, see how we can help.
Nick, I really appreciate you spending 30 or 40 minutes with me today to talk about this. I think the listeners are going to find it valuable. Hopefully, if anybody needs anything, they can reach out. Don't forget, listeners, to follow and subscribe. And most importantly, share this out if you know of anybody that owns a business and needs working capital. Thank you.
Thank you. Appreciate it.
And that wraps up another episode of the Hungry Realtor Podcast.